Hello there, Steve Horn with Short Sales Done Easy, your Phoenix short sales specialist. Wanted to cover the fun topic of loan modifications. How many of you out there who are watching this right now have attempted to purchase a loan modification? Raise your hands. I myself am included in that, so I'm with you. How many people out there right now have actually had a loan modification work successfully in your favor? Raise your hands. If I could be on the other side of this camera, I guarantee that there probably aren't too many hands that are raised that, hey, the bank came in and reduced my principal by 50% and it made me make sense to stay in my property. It just doesn't happen. I want to talk to you about some 3 key points about the loan modification that you need to know, whether you are thinking about entering into a loan modification, whether you already have, and if you are just so completely fed up with the banks that you don't even want to listen to this piece on loan modifications. I understand that too, because they are very frustrating, very low results. What I want to point out is, on a national average, only about 9 to 10% of all loan modifications are going to go through. If I'm a major league baseball player and I'm hitting 1 for 10 and in the major league level, I'm probably not going to be on that roster for too long. I'm probably going to be moved quickly down to some farm league in the middle of Mexico and not be on a very good diet down there. So 9 out of 10, so less than 10% of all of loan modifications going through. Not a good sign if you're relying on the bank to help you out of your hardship. Not a very good percentage. Take that percentage to Vegas and you're going to lose a lot of money. Most clients that I run into that have gone through the loan modification process, what they're finding is that the banks are giving them a trial period to go through this quote-unquote loan modification process. And what they're going to do is they're going to reduce your interest and reduce your payments for a 3-month, 4-month period of time. Guess what? If you've entered into the trial period with the bank, you are a fly that just got caught in the bank's web. Because what their job is to do as a bank is to bring in money, thus your mortgage payment. Their job is to make sure that you're at least bringing in a portion of your mortgage payment. Guess what? If you're going through a trial period, mission accomplished. They've got you where they want you. They know that you're at least making your mortgage payment or a portion of it. What they really don't tell you is that when they're reducing your payment or your mortgage payment for this trial period, you're not paying your full mortgage, thus it's affecting your credit. And so many people go through the trial period, the bank's fund trial period, and they'll get down to it and they'll look at their credit score, and their credit score will be hit because they haven't been making their full payments. So be very, very careful when you enter into a trial period. If you happen to actually get lucky enough to talk somebody to the bank about your loan modification, ask the bank, if you enter into a trial period, is your credit score going to be affected by doing the quote-unquote trial period loan modification? You have to ask that question. You need to know what you're getting into before you get into it, instead of just thinking, great, they've lowered my interest rate and I'm paying $50 less a month. Because guess what? If you do come out of the trial period and they do give you a permanent loan modification, chances are you're going to be paying, and this is directly from probably 90% of my clients who have gone through loan modification, their true loan modification, their adjustment has only been by about $10. But somehow the banks managed to extend their loan from a 30-year fixed loan to a 40-year fixed loan. Not the type of mortgage that I personally would want to be associated with, but it's your call. Most of my clients at the end of the trial period, however, are receiving a rejection letter stating that you do not qualify for the loan modification process. Go figure. Remember, numbers don't lie. If only about 10% on average are being accepted, guess what the other 90% are? Failures. So 9 times out of 10, you're probably going to get a rejection letter, and then you'll have been in this trial period for 5 or 6 months not making the payments, the full payments, and so your credit is going to be hit. So you guys need to know that. That's why you need to talk to a short sale specialist. You need to know this information before getting into it, because you can save a lot of time, energy, and heartache by probably skipping the loan modification process. And if you're in a true hardship and the equity is so much less than what the home is worth, you know, why go through the issues of the loan modification when the short sale is there for you? I also wanted to point out the fact that the banks know that a certain percentage of people who are going to be attempting to modify their loan, they know that there's going to be a great percentage of people who short sale or foreclose. They know that going into it, and that's why, as long as they can do a trial period where they're getting at least some payment, now they're doing their job for the next 5 or 6 months, only to let you down at the end. So they do know that there's a percentage of people who are going to short sell or foreclose based on this number, 10% rule of loan mods going through. The person on the phone does not care about you. They're $8 an hour type workers who read a computer screen, and when you give them an answer, they punch it into their computer, and their computer tells them what to state back to you. They really don't care about your hardship. They really don't care that you've been going through a loan modification process for the last 6 months. They're answering to a supervisor. They're answering to their boss. And if they can get a couple loan modifications through, that's great. Remember, on the short sale side of it, negotiators for, let's say, Bank of America may be working 500 files. They are only going to close on a short sale percentage about 20 to 30 on a good month. Now, short sales have a higher success rate than the loan modifications. So let's take that back and back it up to the loan modification. If short sale negotiators are closing 20 to 30 a month, just think how many loan mods are going through. Maybe 1 or 2 a month for each loan modification specialist who's helping you. Very, very low percentage. They don't care. They're used to it. You can give your sob story, but that's not going to boost up the loan modification service that you're receiving. It's not going to happen. So your story to the $8 employee that's trying to help you on the loan modification doesn't matter. They answer to a supervisor. So their supervisor is the one you need to be talking to in the loan modification process. Just like when we had a roadblock in the short sale process, that's what we do. We escalate up to a short sale supervisor. That's the only way a loan modification is going to get through. I just talked to a buddy of mine within my subdivision who did have a successful loan modification. It took him 11 months, and he said on average he was spending about 2 hours a day on the phone with the bank. So if you have the time and energy to do that, your chances increase. If you don't, it's a long, long road. So visit our site, come check out our short sale versus foreclosure seminar, get on our website, look for more details on that, come to shortsalesdoneeasy.com, and remember, we do make your short sale done easy.